Hi, welcome to today's whiteboard video. So today we will like to address the topic of decentralization. Yeah, so there is a constant theme about blockchains and and how it can bring about decentralization in our economy. Yeah, so let's explore that and how Read Circles aims to address this topic. Let's say that we are currently in a system which is largely controlled by centralized institutions. So in this case, we focus on two institutions that affects us most in our daily life. Yes. So one of the institutions is, let's say, government. Yes. So let's say that we represent the one of the institutions as government, and which is democratically chosen. But at the end, what happens is that they have created financial institutions such as the central banks, right? And then the central banks have created other banks, which are basically under the control of the central banks, right? And there's a whole hierarchy of banking system. There is IMF, there is Bank of International Settlements. These are all private institutions. So essentially what you have is a series of other banks which are under the control of the central bank. So every country has their own mandates over their own banking system which they control, right? And they set the rules and the banks have to follow the rules, right? And in our daily life, what we do is basically we as individuals or citizens, we are interacting mostly with these banks. We don't deal with central banks mostly, right? So you go to your own bank counter or you log in online, and all these people, all of us mostly use these kind of banking systems in our day-to-day life, right? And whenever you need credit, you say, okay, I have a good credit history. I would like to borrow money because I have some needs, right? So then each of us individually can go to the bank and we can apply for a loan or a credit, right? And mostly what you see is that if you have an asset, the banks will accept that asset and give you a loan, right? Now, behind the scene, there are many things that the banks actually do. Yes. So let's analyze what the banks actually do that makes them more and more powerful over time. Yes. And here we have the blockchain, as we said, which is a new technology which is also being adopted by the banks, but it will basically help them centralize more. And these will be private chains rather than public chains that they will be using. And it will lead to rather more centralization on their part and not freedom for the people. Yeah. Now, the technology that we are building on the blockchain will address some of the topics that happens right now inside the banking system, and where individual actors, let's say, pledge their own houses, right? So if individuals own their own assets, right? And these are the assets that individuals own. So you and me, we own our own houses, we stay in houses, sometimes rentals, but nevertheless, these are real world assets that are owned by individuals. Yes. So in this process, what happens now is that the banks and other financial institutions, such as BlackRock, for example, that's one big investment institution which controls more than few trillion dollars of assets. Yeah. And mostly they deal with institutional clients, such as the banks, who invest some of their money with companies such as BlackRock, for example. Yeah. So So let's assume that we take another. So let's say that we have banks and central banks also. The banks deal with not only you as an individual, your clients, but banks actually have connectivity with large institutional investors such as BlackRock. Yes. So this can be institutions such as BlackRock, Fidelity, and other investment bankers. Yes, banking institutions. Yes. So this is an hierarchy of the current system that you as an individual are feeding funds into the banks. Then there are corporates who are also, in fact, feeding money into the banking system. Let's say that you're a company. Um, let's say you're a company such as BASF, or take any of the large Unilever, right? And you have your own banking relationship with the banks, like as a corporate client. So these are corporate clients for the banks. For the banks, these are individual retail clients for the banks. Yes, the banks. And finally, investments flow out. So this is a flow in of capital from the retail clients, and there's a flow out of capital in form of investments into BlackRock's. And BlackRock goes and does what? They actually go and invest into you and me and other real estate assets. So take a lot of smaller individual investments, or you can take even big assets that they invest into, right? So BlackRock basically takes all this money that they have put, the banks have put, for example, and they invest into real world assets, right? And they buy off all these things, and they probably get rental yields, and they get other forms of yields from this real world assets, right? So this is how the loop plays into that. All these assets right now can be actually indirectly be invested via BlackRock, which you do not see, which you do not know, but essentially they might own a huge chunk of the real estate in the entire society, right? This can continue forever, and essentially that's what you see in the current financial system. So you have this entire structure where banks play a role, these big institutions play a role, and they have more and more power. Now, where does the power come from? Just ask yourself, where does the power come from? The power comes because you, as the retail investors and many of the corporates, are actually putting their money in the bank, right? And why? Because they're connected to the government, right? So the government controls the central bank controls the banks take money from the common retail investors and other companies, invest it back into centralized institutions such as BlackRock, who in turn invests it back into your real world assets and makes money out of them. But what happens is that whenever such big institutional money comes into the entire financial system, and remember that many of these institutions are the primary beneficiaries of so called fiat minting, right? So, if during inflation, during let's say monetary easing, when the money is released from the government to the central banks, central bank has the job of distributing that money to the banks, and much of that money actually goes into large institutional clients, and who in turn invest it back into the society, inflating the prices of the real estate, which you, as we as a common retail investors, are not anymore able to invest, because that monetary flow which flowed into the real world assets benefits mostly the primary investors like these. Yes. So that's where the entire so-called the Keynesian philosophy of rich becomes richer and poor becomes poorer comes into the play, right? So how do you address this topic? How do you break this chain of investment cycles and the monetary fiat-based inflation that has happened in the entire real estate market over the years, right? Well, one part of is that you try to analyze what the banks are actually doing and how you can do it better, but you deal it in a peer-to-peer manner, right? Um, Blockchain enables you to do that. So how? So let's say blockchain, if you have now a real estate and you own that real estate, right? So so let's say that you own a real estate, right? And expand the chain. And similar to you, there are other real estate investors, right, who are there. Let's start off with three of them, right? Now imagine that what you are giving away to the banks, first of all, is that you are giving away the data to the banking system, right? You're giving away capital, and at the same time, whenever you interact with the banks, with your house papers and everything, you give it away to the banks. So instead of that, imagine that now you are able to interact with each other via the non-banking system, right? Which may have later on fiat on ramp and off ramp, but you're able to interact with each other via this so-called the blockchain based systems, right? Whatever it might be. So once you're able to do that, then an entire area opens up, right? Whatever you are doing in the banking system now can be done via the blockchain, right? Now, the banks primarily play multiple roles in the process. If we focus right now only on real estate, again go through the process. If you have to lend money against your real estate, what are the steps that you do? Yes, let's go through that steps, and then we will come back and check how that can be done and how can be enhanced in our favor if we try to do it via the more democratic process via the blockchain, right? So let's analyze that. So imagine now that you, as an individual who owns an asset, real world asset, let's say real estate, now has to go to the bank in order to raise capital, right? What are the steps that you do? You go to the bank and you submit your house papers. You say that, okay, look, I have house documents, right? Again, we go back to the documents. That's the default way we deal with it, right? So we deal with the documents and then we say, hey, look, I have a ton of documents for the asset. And also, you can check my credit history. Then you give that to the banks, right? So the banks don't take those papers. They do a few things, right? First things that they do is that they verify your papers. That's the first function the bank does. They verify the legitimacy of the house papers, right? Second step, what they do is that they will check your credit history, your credit history, right? Again, these credit history, they don't do it themselves, but they have sometimes financial institutions which are taking care of that, right? So they have other institutions which are taking care of this credit history, again, centralized, right? So these are not black rocks, but let's say these are insurance companies or any kind of institutions tracking financial history, right, of persons. So they take help of credit history, right? Now, if they find that okay, you have a good credit history, you don't have any mortgages, so they have also a mortgage database. So in this case, what they maintain is that countrywide they will maintain a database mortgage, for example, the lending against your asset, right? They will maintain a history of that and they will do a cross check against these two, right? So once they have done these two things, then the third thing that they will do is, let's say, okay, you're fine to get a credit. We like your credit history. Your house paper seems to be legitimate. You are the full owner of a house. Then the third thing they will do is they will do a pricing of an asset. And they also do some kind of risk analysis against this thing, which accompanies the risk analysis. Yeah. Means that if some calamities happen or your house is burned down, what sort of risk is run, and then they will do this risk analysis. Their primary goal in this entire process, the primary goal of any kind of central financial institution in this process, is that they would like to reduce their own risk, right? So that they do not want, first of all, to lose money, right, in any form, and because they are centralized institution, they will build tremendous power over many of the things. As I told you, they are highly connected with the central banks. They are highly connected with the large institutional investors who have a lot of money. So they wield a lot of power, both financial as well as legal, right? So they have lawyers who are helping them out. Now, given that, what happens in this combination of pricing and of an asset and a risk analysis is that pricing again is controlled by another institutions in the back end. They help with all the data and all, and they claim to be super good in bringing out a pricing, right? They take help of these institutions to get pricing data, right? So now you see that the entire chain behind the banking system, how it has evolved. Now, at the end, what happens is that you are in need of a credit, right? And you have gone to the banks. Banks take help, they price an asset, and finally they will say that, okay, after you have done all of these, I will give you so much amount at so much interest. So then they set lending rates, they set the lending rates, rate and period, right? Period of lending, how long you are going to borrow. So they will do these things, right? Now, as you would understand that, then you say that, okay, if they are doing this, whose money is it? Yeah, whose money is that they are borrowing to? Well, you only have to check where the source of earnings for the banks are, right? So you say that who is actually providing this capital that they are borrowing out, because they have to give the money to somebody, right? And they have to finally give returns also. So this process, whenever the lending rates and period of lending they are set, they also calculate their own earnings. Then they say, okay, have we borrowed the money from somebody else? Yes, probably. So then you see where the bank's getting the money from. They get money from central banks. They can print money at against some asset. Then they will say, okay, you we have an asset here. We want to lend against this asset. Then let's generate some money either through fiat printing, or they will use their reserves that are there, right? And either from institutional money or these things, they are lending actually your money to others, generating a return, and expect some of that returns to be paid back to you in form of deposit interest or something like that, right? So some of this money has to flow back to you. Now, question is, does this happen? Yes, does this happen? So that's a big question mark. Yes, so there is a big question mark on this one, that um, does the return on investment, so called, from the other investments done by the bank returned back to the clients? Yes. This is a big question mark. There is no yes and no answer to it, but let us come up with the facts. Yes. So right now, the banks are paying to us almost 0% interest. Yes. 0%, 0 to 1 or something like that interest, at least in Europe. And in US right now, because of the higher interest rates, they are paying a slightly higher rate. Yes. But whenever you lend money against this assets, for example, they try to weigh the risk and they charge you somewhere in the figure of more than 8%. 8% higher. Yes. So whenever we had undergone this entire 20 years of monetary easing, almost from 2000, let's say 7 or 8 till 2023, more than 15, 17 years, we have undergone a period of very low interest rate returns that we have got, almost 0% interest we have got, while the house prices had appreciated so much. Why? Because of this money flow. The cheap money actually went into the houses, and the biggest beneficiary were the BlackRocks and the banks. Yes. And the normal people were left at the mercy, right? Because they did not get any returns whatsoever when they kept money in the banks. Now, how can this system be therefore changed? It was you invested as a normal investor, invested a lot of money into your savings account, but you did not get any returns. So essentially, your money got devalued over a period of time, while the banks, due to their flow of money, they actually appreciated a lot. They got a lot of money in return. So these are the problems that now needs to be addressed. First of all, verification. Second is checking your credit history, pricing of the assets, and the lending rates, right? So these are the pillars, you can say, pillars of the current banking system. It makes very common sense, but right? So, but we have to address these topics because unless and until they address these topics, the system is going to stay exactly the same. Yes. And it's a hard thing to break, but at the same time, given that people are getting more aware of the drawbacks of the fiat monetary system, I think they're looking for a change. And that change is possible. Why? Because now we have got another system of rail or means of financial, let's say, transfer of value. I call this a transfer of value chain, right? So this is chain for value transfer. Yes, means people can put in value here and they can also transfer value from one person to another. That value could be anything, right? But let's address this verification of the verify the legitimacy of the house and the papers, right? So if we take this as the first pillar and say that how we can do that better on the blockchain, then you can immediately see that if you copy this and we do that, this is precisely what in the last, let's say, video we had done, we try to explain that how read circles is trying to disrupt this pillar. That you can now essentially undergo a secondary verification on read circles. So in this case, what happens is that the read circles will secondary verification loop, we call it. So this pillar can easily be dismantled once we have an infrastructure that we are trying to build where people can control their own documents. They can exchange their own documents in a much more secure way. And they can also get it verified by the same set of real world actors who are verifying the banking, who are helping the banking institutions, the notaries, the lawyers, right? They can also work on the blockchain and earn money. And in this case, the owners of the assets, right? So owner one, for example, can interact with borrower of or lending, right? So if a borrower owner wants to, let's say there's a lender, right? He wants to lend money and he wants to lend money to another owner who wants money, right? And then this entire asset needs to be verified And once it is verified, then he can go towards a lending platform and then use that as the pillar, right? So, as you see now, once you own your own documents and you're able to transact value via this platform, right? So, this is Read Circles, for example. Read Circles wants to create this platform. So, let's say that this is Read Circles, right? And Read Circles, you can use this platform for transferring value from one to the other. So therefore, what you have is that you keep ownership of your own documents. So the documents actually stay with you because you own the NFT. So therefore, all the data actually ownership lies with you via the NFT. Yes. And similarly here, everybody will interact and own their own data. Platform does not own the data. You keep the data documents with you and you provide it only for verification purposes. And they're burnt onto the chain, as we discussed. So they're burnt onto the chain, and but the ownership of the document stays with you. Yes. And we will also have a privacy layer. So here, whenever you create documents, they go onto the chain in the form of a digital documents, right? And the read circles will allow the verification to happen, the data to go onto the chain, and the data ownership to stay with the owner, whoever or the lender who wants to verify himself or provide lending capacity, right? But in the end, you see the verification of the assets of the house, which anyway is required. The government was not involved here. We are just replacing the banking functionality and decentralizing it in a form using the blockchain. Yes. So that's the first pillar we try to address. Yes. And I think in the future, once this has been addressed, you're addressing one of the fundamental centralization that happens when you give up ownership of your documents and everything to the banks. In fact, banks maintain their own huge warehouses. So the banks maintain warehouses for maintaining all your documents, house papers. Yes. And in certain well regulated countries, Europe, US, other first world countries, they are called Japan, this works. But in other, let's say, third world countries, countries which are not so well off, the huge amount of corruption might be there. Because the paperwork is controlled by a centralized institution, it leads to fraud. Yes. So warehouses. So here, what you get out of that is many bad elements in the form of fraud. Yes. Fraud, power play, right? Politicians, political forces, right? Trying to defraud normal people. Yes. With their money power, right? So these kind of things can happen, right? Because of the centralized forces that are there. And you cannot prevent it because they control most of the monetary power. Yes. But moment you go to a more decentralized system where individuals control their own destiny, this automatically will reduce. Why? Because moment this data is burnt onto the blockchain, they are immutable, as we discussed, right? They are immutable. So no matter whoever comes later on, whether he is the most powerful person on this earth, he cannot change this data. He cannot change this data. So this has a permanent footprint as long as the earth exists, as long as the computational power and the networks that we have created globally exist, this will remain, right? And because of that power, it directly addresses the issue that these frauds cannot happen or drastically will be reduced. Yes. So this kind of fraud will not happen too much. Yes, it will not be zero, but it will be drastically reduced. Yes, it will not happen. Yes. So you see, immediately, just sheer fact that now you have controlled your own, taken power into your own hands by minting NFTs on the blockchain using the breed circles as a platform, right? Immediately, what you have done is that you have sealed your own destiny. You have made it more robust. So if anybody else later on comes and claims that he owns the asset, right? Immediately you can reference the data on the blockchain and use that as a tool to fight against any such forces. So it is a means of liberation in a sense. Yes. And that's what Read Circles finally aims for. It wants to enable people and return power back into their own hands, right? And using blockchain as a force for good, right? Um, so, and this is the true use, let's say, of the blockchain as a technology for the social purposes. And also, it helps, as you see, in the decentralization of the entire part, right? So, this completes, let's say, a brief introduction into how the current banking system works. So, let us summarize the whole thing. The current banking system is based on the governments being strongly connected to the central banks, and they in turn controlling the other banks, to which all our retail, we as retail clients put our money into, including institutional investors. The money finally flows into large investment institutions, which are BlackRock, and they finally eat up many of the real estate, proper and good real estates in the country, and shoots up the prices, making it unaffordable to the initial investors who actually pushed for the system, right? And moment and whenever you go to these institutions to lend money, what they will do is they will undergo a lot of checks in the back end, and finally they will lend you money at a higher interest rates while not returning back the returns to the actual investors who put the money in the first place. Blockchain as a technology and Read Circles as a platform is trying to address this basic issue to return freedom back to the people by enabling them to hold their own documents, enabling them later to borrow against their own asset via peer to peer lending platform. Yeah, that's it. Thank you.